Widely known that Regulation 28 allows for an additional 5% offshore allocation provided this is invested with Africa-focused funds. However, many fund trustees and asset consultants remain unfamiliar with Africa as an asset class. Why should it be included in a portfolio, and what factors need to be considered when evaluating Africa funds for potential investments? Oliver Hoffman, portfolio manager at 274 Investments, joins me in studio to give us the lowdown. First of all, let's go through the Pangaea Fund of Funds, which obviously is the Africa focus. Tell us a little bit about the fund.
Yeah, so we're one of the first to launch a fund of funds, specifically only investing in the Africa continent, called Pangaea, simply because Pangaea was the original huge, when all the continents were combined, that continent was known as Pangaea, and Africa is the oldest continent of all the other continents, hence the name. We've had the fund incepted for 2 years, June 2011, currently capitalized 250 million rand, domiciled in Malta, and it's an institutional fund or for high net worth individuals.
How do you go about selecting the fund managers that you deploy cash with across the continent?
So I think first and foremost, within the Africa space, the diversion of returns amongst fund managers compared to normal domestic mandates is a lot higher. So we really a key component we look at and evaluate is the manager's investment philosophy and the consistency and the how they apply their investment philosophy. So do they actually do what they say? That's really a defining feature in our research. And in addition to that, we also evaluate extensively the manager's experience in Africa, the informational network and contacts, and that's really key to implementing trades.
How important is it that the teams have people on the ground on the continent?
It's important, but it's not an overriding decision, simply because the level and flow of information is improved to such an extent that you can manage portfolios without necessarily being on the ground. But travel and having a network on the ground is obviously important to monitoring developments within specific countries.
How do you still see the risks to investing on the continent? Perhaps you can just take us through the top risks in your opinion.
Sure. So the top risks, and always what's key in Africa, is the level of conflict and poor governance. And relative to international standards, it's still a problem. But the level and the incidence is declining, and that's been shown over the past 20 years. So the risk as a whole is declining. Governments are becoming much more transparent, as well as the private sector as well. And oddly and surprisingly enough, everybody thinks Africa is more risky. But if you measure risk in terms of volatility, so the standard deviation of returns, in fact, Africa's been less risky over the past 10 years than other emerging markets. And that's simply because those economies are less integrated into world markets as what other emerging economies are.
But one of the biggest challenges, Oliver, has to be the level of liquidity within these markets, the depth and breadth, and that is missing in many instances.
Sure it is. So if you compare the JSE, what the JSE trades in a month, the whole of Africa trades in a year.
Well, that puts it into context.
That puts it into context, sure, but there's also opportunity there as well. So there's a lot less players, it's a lot less crowded trade as well. And also you need to bear in mind is that overall liquidity levels in Africa are basically a third of what they were at the peak in 2008. And that appears to be bottoming, and liquidity levels have this year improved quite substantially. And we think as those countries develop, liquidity can only improve going forward.
I've seen some different philosophies around the Africa story and the Africa investment story. One of the private equity players came into studio saying that they are now ready to see the continent as a whole. We're far from that, aren't we?
Yeah, I agree.
I did challenge the view when it was put to me.
It appears to be. I mean, it really comes from and management consultants love to portray Africa and the whole of the continent as a single country, and that's actually very far from the truth. The dynamics are very different in West Africa to East Africa and Southern Africa, and within countries as well. So it's not a philosophy.
Well, even from Ghana to Nigeria, completely
yeah.
different, both
and
in West Africa.
If you travel to those countries, often they're chalk and cheese as well. So I agree. You cannot portray, and it's often falsely portrayed as a single market, whereas it's not.
But there are those that say that Africa as a continent, incorrect or not about the grouping, is 10 years behind China. Do you agree with that?
Yeah, that's difficult to evaluate. What many people are saying is that Africa is there, particularly in the late 70s and early 80s, where the original Asian tigers were in terms of development. So it's fair to say, potentially. It's difficult to say which way it'll go, though.
All right. What is the most exciting story on the continent in your view at the moment?
Well, what you hear often from the management consultants is a consumer story, but you also got to always bear that in relation to what you're paying for consumer assets, and like other emerging, similar to other emerging economies, those assets are highly priced. I would say probably the biggest theme and the most exciting theme at this point in Africa is the infrastructure theme, in particular the power deficit. And if they can just improve on the infrastructure in Africa, it'll have a magnified effect on the ease of doing business, and hence a leveraged effect on company bottom lines as well.
There's another theme creeping into the equation of late, and that is agriculture.
Yes, correct.
Do you feel that that's got legs?
Yeah, that definitely has legs. According to the UN, 60% of the world's arable land that's uncultivated is in Africa, but water is an issue. And it takes time. These things don't happen they have lead times, development times of years. So, but there certainly is potential. There's potential in all aspects of the African economies.
Talk to me about the entry point on Pangea Fund of Funds.
When you mean an entry point?
Just a little bit more detail in terms of how do we get into it? How much do we need to invest?
Sure. So the minimum investment is R1 million. So it's geared towards institutional investors, pension funds, or high net worth individuals.
I was going to say there could be high net worth individuals that want to go this route in the retail environment.
Correct. So the best would be to contact us at 274 Investment Managers. If you Google, you'll find our website. You can contact me. And it will form part of your offshore allowance. And in terms of Regulation 28, you're allowed an additional 5% offshore allowance in addition to, provided it's an African investment.
What interest are you seeing from foreigners?
It's picking up. So we have had no foreigners commit just yet, but that's simply because there's enough Africa products in the European and the US markets currently. But every week we are receiving a higher number of inquiries, also particularly from international institutional investors.
What about this trend where emerging markets are now falling out of favor? Is that starting to impact you in any way?
So, and it certainly came through this past month in June, and African markets were affected. But you've got to bear in mind, African markets are still a third off where they were in 2008, where most other emerging markets have in fact exceeded their levels prior to the 2008 crisis. And valuations in Africa are far more attractive. You're on average looking at about a 20% discount valuations to emerging markets within Africa.
All right.